Hey everyone, it's Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As you can see, that I'm back in the mountains. Actually, just got back today, feeling a bit better. Last week was pretty rough, and it got a lot rougher after the recording. Many of you noticed that I seem to be a bit under the weather. I really appreciate the comments and the well wishes. It's been a brutal week, but feeling much better today. And speaking of the comments, thanks so much. We did it. We hit the 40,000 mark, and we appreciate so much your support, all the positive comments. And as promised, we have put every name. That's the beauty of modern technology. All the names of comments went into a big hopper, and the computer electronically picked the 4 winners. So stay tuned to the end of this recording and find out if you're one of the winners of one of our level 3 subscriptions. And then we'll need you to contact support at that point and time. So again, thanks so much, everybody. All right, taking a look at the markets. When we took a look at this move to the downside, we had this big vertical bounce. We talked about that a little bit last week. I know it was pretty hard to listen to, but this pretty vertical move came off a likely spot here at the 161.8% fib extension level. So a logical point to bounce from, and top of the fact that we had the 410 level there acting as support from April and May. So I'm going to go ahead and take this zigzag pattern off, talk about what's happened over the past couple of days. So yesterday, Chairman Powell comes up and said the Fed is not confident that they've done enough to quell inflation. They did make some positive comments on how things are going, but they're not confident they're done yet. Well, that turned the market back to the downside. And it's interesting point of where it turned back because we're right at this resistance level of 440. And my feeling is that until we can break 440 with follow through, you still have to keep in the back of your mind that we could be heading back down again, especially when we have this vertical nature of the upward move on top of these multiple gaps. So you got multiple gaps, you got a vertical move. Those are two things that are concerning on their own. And then when you have those reach a point of resistance at this 440 level, that just brings in a little bit of stay on our toes moving into next week. As you can see on the close today, we did get above 440, barely closing at 440.34. And that was due to the fact that yields backed off again. So that correlation seems to be back in play where we have yields moving down, market moving up, and vice versa. So a little bit of a back off in yields, move to the upside, barely above 440. So I don't really count this as a break above it. And 440.34 is not that big of a move. So the way I look at it, we've moved back up to resistance. We did have a little bit of consolidation here over the past week, and then we're trying to make a break above it. But we've got to break above it with follow through. And if we do, then I think we can start looking to the end of the year rally. The seasonal time of the year where things normally move to the upside. The old expression, never short a dull market, plays in. And that's just the market tends to drift higher when volume is lower. That's where that expression came from. So we're getting close. So we have filled. A couple of people ask questions. Well, how do you know which gaps are going to get filled first? Are we going to fill that one first, or are we going to come fill these lower gaps? So we have the answer. The upper gap got filled first, and I still say that until we can break 440 meaningfully with follow through, we have to just take into account that could be a rally back to resistance off a very normal support level, and we could head back lower. We need to keep that in the back of our minds. Moving into rates, as we said, rates back off a little bit, and it allows the market to rally. So it seems like the correlation is back in play. You can see the rates had gone up on Powell's comments. Another interesting thing is we have it is small, but nonetheless a triangle here on the 10-year, the TNX. And Elliott always said, don't diss the small triangles. They matter just as much. Everybody always looks at the big ones for big breakouts, but something's going to happen out of the 10-year. We're going to get a little bit of a break here, so it's only about a 2-point move here. And so it'd be 0.2 interest rate wise, but something's going to happen. We still have this gap here, so an upside break to fill that gap probably would put a little bit of downward pressure on the markets, but we still have a gap down here that hasn't been filled either. So it's really interesting to look at this little triangle, because an upside breakout probably fills that triangle above, or that gap above, and a break to the downside probably fills the gap below. So whatever happens with rates next week, certainly going to determine whether or not we get that break above 440 with follow through. The dollar has been cooperating for quite some time here, unlike rates. Rates did back off and then went sideways. Well, the dollar now is going sideways here. After hitting that 107 mark, we came down and we're just hovering in this 105 range. But we are still in a 5-wave qualified pattern to the upside. And if the dollar takes off again, and same scenario there with the TNX, if rates take off again up towards that wave 5, you get the double whammy again. It's going to be a very challenging time for the market to go higher from here. So hope everybody's enjoyed some nice upward moves we have at ewotrader.com, taking advantage of some pretty strong rallies in some of the stocks. But again, there's still danger lurking out there, to say the least. And then looking at the VIX, we've had this nice move back down in the VIX, heading back down into this lower range that has acted as support before, so something to be concerned about as well. There's that 14 level that we touched on the low yesterday, and near on the close today. So we're kind of right in this area where in the past we've had a bit of a bounce. So again, hope we've enjoyed the rally, but don't get too complacent and think that the bottom is in. We talked about Jeffrey Gundlach and Bill Gross last week, both of those people concerned about a recession at the beginning of the year. So more potential downside there. Bitcoin, there we go, off and running. So nice move to the upside in Bitcoin. Is this the run into the halving? Who knows? You kind of have some fun with me on that. But we've had a nice breakout move, and it looks like it wants to try to continue this move. And if it does, then Bitcoin could really move from here. Taking a look at Coinbase. Coinbase is one of the favored stocks to look at on TradeFinder every Tuesday night. By the way, if you haven't signed up for TradeFinder, please do that. We do it every Tuesday night at 9 p.m. Eastern Time. It's free. You can see the link on your screen right now. And as you join us, we talk about the markets. We look for trade ideas, and we have a live Q&A. It's a great community with TradeFinder, so we hope you'll join us for next week's TradeFinder. Seems like Coinbase comes up each and every week. Somebody wants to know about Coinbase. So again, a favorite stock of our viewership there on TradeFinder. But looking at this move to the upside, the important thing here is that we've broken above 90. We had said that as long as we held above 70, you could stay bullish on Coinbase. That turned out to be good advice and worked out really well. Moving to the upside here and staying above 80. And then now we've gapped above 90. Now that's the problem. I wish it wouldn't have been a gap there. So you have to wonder, are we going to come back and fill that gap before we go higher? But we had talked about if we could put some distance between 80 on Coinbase, because that was a pretty good trading range. You can see there between 70 and 80. If we can make a move, then we're likely heading up to try to test these highs back from July around 110. I think that's in the cards. The only question is now with this gap, do we have to back off a little bit and fill that gap first? So let's take a look at the 10-day moving average. And as you can see, makes sense with the sideways move today. We are a little bit overbought from the 10-day moving average. No security in any time frame, gets very far away from the 10-day moving average. And so that's where we sit there with Coinbase. And last comment on Coinbase here is that we did hit 100, one of those round numbers on the high. So we got way overbought, hit 100, backed off a little bit. But I think Coinbase looks poised to move higher along with Bitcoin. Some stocks of interest Nvidia, the AI stocks, back in play this week with the rally, and you can see nice rally there on Nvidia. Now we do have a 5-wave impulse pattern to the upside that is qualified on Nvidia now, and look where that wave 5 target is, all the way up at 600. So we have to break above this area of resistance right through here. We talked about the potential of a head and shoulders pattern. Well, in true Chuck Norris style, Nvidia just kicked that away and said, nope, not doing that. Not going to have to worry about any sort of a head and shoulders breakdown here on us. And so they held that support level at 400. And now we are back up at resistance. So it did nullify that potential head and shoulders pattern. But we got to get above this level here at 500. And if we can get to 500, it looks like we want to go to 6. That looks like the next move there on Nvidia. Anheuser-Busch is back in the fold. Good old Bud has made a move to the upside. So perhaps some of that political stuff that was going on, we don't need to get into that. You all know what I'm talking about. Maybe that has worn through and it's tired. We had a pretty significant move to the downside. Long consolidation period here from the beginning of the summer, beginning of June, and a nice rally here off of the lows down around 52. But we're getting a bit vertical here, and as you know, don't like it when we rally so vertically like that. It isn't a wave 3, but notice on the low today, we touched the 10-day moving average or got awfully close to it on the low and then rallied up to close near the high of the day. So that wave 3 target up around 62 looks like that's where we're going to go on Bud. The only question is that a continuation in this wave 3 to hit 62, or do we need to have a wave 4 correction first? If it wasn't so vertical, then I would say probably heading up towards that level there of 62 first. We look at the DMI here, you can see a little bit of a kink in the ADX. So that leads you to believe that maybe we do need a little bit more pullback there, but certainly caught some people's attention this week with that vertical move in Bud. Charles Schwab, a lot of the brokers in the news say Robinhood's earnings seem to affect Schwab negatively for whatever reason. They're not quite the same type of a service, and down we go in Schwab and a 5-wave to the downside Elliott Wave pattern. That's a concern there as far as if you're a believer that the financials need to be solid in order to have a market rally. A lot of people believe in that. Some people don't believe in it. It's interesting that viewpoints are different along those lines. Tesla, everybody feels the same way about Tesla and the fact that they're all seem to be bullish on it. Now we held that 200 level, which needed to hold on Tesla. Otherwise, it was looking pretty negative. Notice a lot of these patterns. I have the Elliott Wave key on here, but with a lot of these patterns, they are no longer in 5-wave patterns. Not 5-wave impulse patterns. So that means that some sort of a new impulse is being generated. So we bounced off 200. We didn't make it up to fill this gap yet, which I kind of thought that's where we were likely to go if we had a decent bounce off of that 200 level. Elon's out talking about the Cybertruck and marketing it pretty hard, but then saying that it isn't going to help the bottom line for 12 to 18 months. So it's interesting that he's pushing it so hard and then talking about how it's going to be a while before it's accretive to earnings. All right, getting back to our AI stocks, let's take a look at Google, which had a rough time following its earnings report. Big move to the downside, and it's enjoyed this rally this past week, moving back up, getting awfully close to filling that gap. It's not quite filled yet, but getting very close. And again, a 5-wave pattern that ended. And so here we came back down towards the previous 4, and we're bouncing back to the upside. And you see the 10-day moving average here that we hit on the low. We're able to close not just above the 10-day moving average, but above the 50-day moving average as well. So Google seems to be climbing back into the seat that the driver's seat, if you will, that it once held. All right, back to a couple of our markets. The IWM, a lot of you ask about the IWM, and boy, it had a nice bounce off that is getting awfully scary. It was almost a Katie bar the door time there, trying to break that 165 level, but we held there. We bounced back to the upside vertically, but look what's happened since then. This is a perfect example of why I always comment about I don't like vertical moves. what goes vertically up often comes vertically back down. That's exactly what's going on with the IWM right now. We did have a little bit of a bounce to the upside today, but when you look at the moving averages, all we did is bounce back up and close on the 10-day moving average. We are in a pretty well-structured 5-wave to the downside pattern here on the IWM, looking like maybe down to about 155 there on the IWM. Hard to imagine that we're going to have any sort of significant continuation of the rally in the markets without the small caps. Perhaps we can. Maybe the AI stocks are going to be enough to drive it, but when you have a good, strong, healthy market, you have the small caps along with you. But here's the cues, and they have enjoyed a heck of a day. As I said, with the AI stocks, interest rates backing off a little bit today. You can see that all the Qs want is just give us a break on the interest rates and we'll take off and run. And once again, no 5-wave pattern, which means this is a new impulse move right here. And the very first impulse move is the hardest one to figure out where it's going to end. You kind of have to wait for some sort of a corrective move before you can figure out if you're in a zigzag pattern or you're starting a 5-wave impulse pattern, what's going on at that point. But that was definitely a new impulse pattern move to the upside here, breaking above that 10-day moving average. Now, interestingly enough, we're almost a little bit overbought here from where we closed and the 10-day moving average. So maybe we need to break a little bit at the beginning of the week and see what happens on whether or not we can continue this rally or not. And last but not least, let's take a look at gold. Gold has moved up to 185. That's the area that it needed to break above. Looked like it really wanted to try. You can see all of that resistance that goes back to March and April earlier in the year, where we traded through that level for quite some time. We ran right up to it, couldn't get through it, at least not yet. We take a look at the 10-day moving average. We're back below the 10-day moving average, but the positive, we're still holding above the 50-day moving average. So can we hold right here in 180 on the GLD? I think is going to be the key. If we can, maybe we make another run at 185. If we can just get above 185, I think a strong bid comes into gold and silver, the metals. But it has to do it first. Just thinking about it doesn't accomplish anything. Thoughts don't make trades. So we got to break above 185 with follow through. See if we can hold 180. Just consolidate a little bit and then take a run higher. All right, now the fun stuff. As you'll see on your screen, here's a listing of the 4 winners. And again, chosen totally by random from the software. And there you go. If your name is on that list, congratulations. What you need to do is contact support@ewotrader.com because we need your email address information in order to get you set up with your subscription. So if your name is one of those on the list, contact support@ewotrader.com and they will get in touch with you and help you get set up for your membership. So once again, thanks everybody for all your support, all those people celebrating our 40,000 with us, and we very much appreciate that. We appreciate your viewership week in and week out. Let's push on to 50,000 now, and who knows what we'll do then. Some of you said onward and upward, and I totally agree with you. So thanks again so much. Appreciate it very much. Enjoy your weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.